I see lots of discussions out there around NIO and profitability and some excitement that might be happening earlier rather than later. And in this video, I will be debunking one of the comments out there. It's not meant in a bad way. Somebody in my Patreon community sent me the link to this post, and I'm not naming names here because in fact this author of that tweet has blocked me. I think that's possibly due to the fact that in the past I also outlined something in this person's research that didn't make sense, and there's actually something a good find in here, but also a wrong conclusion. And so let's jump in there. So not naming names, as I said, but here this author is saying important infos. NIO's annual report seems that NIO is renegotiating its deal with the Hefei strategic investors to delay the China IPO to December 2027 or 28. So this is actually a good find. This was filed in the NIO F20, so the annual report, or 20F, sorry, and this is a valid point here that initially with the Hefei agreement there was a date set for one of the milestones to achieve, which is that NIO should actually be listing also on the mainland, and that has now been seemingly renegotiated, so that's a great find by this author. But what's the wrong conclusion here? He's saying this is important because Chinese stock market requires a 3-year track record in order to list. So NIO must be profitable before December this year. So it seems like this author is suggesting, we've got a hint here by what time they're going to list in China. And so we know actually NIO is planning for, because if they just renegotiate that, then they know that this year, by the end, they will be profitable. And I think there's unfortunately, but I'm going to explain later, but I think there's a very low likelihood for that. But first of all, this conclusion is unfortunately wrong. All it takes actually is to go to the Star Market official website that is giving us the listing requirements for getting a listing in the Chinese stock market. Well, not just one Chinese stock market, there are different ones, and here it's about the mainland China, and there are different boards. So the main board / SME board, there's the Next, and there's the Star Market. There's also an overview, very easy to read actually, about the profitability requirements. So for the main board, it would be in the last 3 fiscal years, the company has made continuous profits and accumulated net profits that are exceeding 30 million RMB. So maybe this is where the author gets the idea that the 3 fiscal years of continuous profits are necessary. However, as you've seen here, there's also the Star Market and the Next index, which both have different requirements. One is in the last 2 years, the company has made continuous profits, and the net profits are no less than 10 million RMB. So if you just get that into USD, it's actually almost nothing. And here, for the Star Market, it's actually companies that conform to orientation of the Star Market are not yet profitable or have accumulated deficits are allowed to be listed. So NIO could be one of these companies that is adhering to the 5 set of differentiated listed standards. It might also go to the Next index, where it's also possible that in the last year, the company has made profits and a total operating revenue that is no less than 50 million RMB. It's the same thing, pretty easy to get in a company the size that NIO is. And NIO would fit both the descriptions, a growing innovative company or a growing science and tech innovation company. It's a tech name, right? This is going to go to one of those sort of NASDAQ type of indices in China. It's not gonna go just to the SME board. So as you can see, the listing requirements are not 3 years of consecutive profitability. That's a myth. I think even in the case that it would be the 3 years and so on, the way that a listing could be done could be kind of with legal tools it can be done, but just by, for example, making a Chinese holding company and making that one become profitably after some artificial periods with revenues and such, and list that company. And the lawyers, they have various tools and stuff of getting things done. I wouldn't rule out that might be possible, but as I mentioned here, both for the Euronext and the Star Market, it seems like it might actually be possible even today. So coming back to this tweet, and I'm taking that as an example of inflated, unrealistic expectations towards a very recent and soon profitability by NIO. I think that's just unrealistic. That's not where the company is. I've also seen actually by a YouTuber that I respect, Aaron. I'm sometimes watching his videos. I think he's one of those people who's actually doing some pretty good deep dives on NIO, and he's on our side. And so I like his stuff. This is not for calling him out, but I think speaking about profitability right now is actually kind of making a shortcut where it's actually not necessary. I think we've got so much stuff coming up here with Onwo, with all of the expansions, with the price war and whatever, the current hold on the battery swaps build out, but they will resume within this year and make a very, very quick scale up. The company has raised money, in my opinion, in an unfortunate way, but now has the money for such expansion plans. So I'm not sure like how high on the minds of the management and CFO is a short-term profitability. What I'm hoping for, and I might shed some more light on that on my Q1 and Q2 expectations for the earnings, that hopefully the CFO starts doing its job right and gives us indications of how he sees the path towards profitability. I think that would be worth a lot already, instead of just cranking out a profitable quarter, which I think it's not necessary, and it doesn't help the stock as well. I think just have a look at Tesla. They had profitable quarters in between, but it didn't really move the stock until there has been quite some change in the trajectory and the free cash flows, and making those discounted cash flows more predictable for the future. That's what we're looking at, and that's, I think, what we should be looking at in the earnings. And yeah, I know we might have some helpful things, like Q2 is definitely looking much better also than my expectations. I can say that already from the top line. And we have such question marks how the, let's say, the 4.7 license agreement and so things like that will possibly help us with some unexpected 100% margin fees there that will go and help us on the bottom line of the business. And I'll possibly make a separate video about that, but I'm not expecting that brings us to profitability anytime soon. So that's just my 10 cents here. What's yours? Let me know in the comments. Thanks for watching. See you in my next videos.